Good morning. I'm Greg McKenna and welcome to Friday's morning market wrap. Interesting night last night with European stocks opening strongly in the black but falling for most of the session for some pretty decent falls by the end of trade. The DAX was down 1.57%. The rest of Europe was down a little under 1%. In the UK, the FTSE managed to buck that trend. Part of what happened there was obviously that the ebullience we saw in Tokyo and Sydney today proved unsustainable when the bigger markets turned up, but also that towards the end of the European session, or halfway through it, I should say, the US ISM was released, and both the ISM and the market economics PMI data was weaker than expected. The market was the weakest it's been since March, and the ISM, which is the granddaddy of Purchasing Managers Index, was the weakest it's been for a couple of years. That put pressure on stocks in the US, and their lows of the day were around midday before they started to rally again. Importantly, last night we heard from both Lacker of the Fed, who voted for a rate hike in September, Jeffrey Lacker, and we also heard from John Williams of the San Francisco Fed, who's seen as a close confidant of Janet Yellen, given that he took her job. That may or may not be true, but there is people do see that there is a connection there. What he had to say was that there is still a case for rates to be risen in 2015, and no one should be surprised when the Fed raises rates. That's entirely true. As you know, I thought they should have gone in September. I thought they were going to go in September. They threw in this thing about a broad, nebulous comment. They can probably walk away from it. October is probably not on the table, even though Lacker said it is, and December looks like when it's going to be. That's provided that the data plays ball. Now, we're going to see a strong non-farm payrolls tonight. We're also likely to see an upgrade to the August number, which was the one that was released last month. And the reason for that is that over the last 3 or 4 years, August has been a relatively weak number, which has then been revised up as the months went on. So we'll wait and see what happens, but it could be a strong number tonight. That's going to be good for the US dollar. It's not necessarily clear, given the fractious nature of trade recently, whether that's good for stocks in the US or whether it's bad for stocks in the US. And, one of my favorite strategists at the NAB, Emma Lawson, was saying this morning that she wasn't sure, that it's a bit of comsi-comsa kind of market. And, they're trying to figure out whether good news is bad news or bad news is good news, or what does it actually mean? And so tonight's strong data, which I'd expect from non-farms, is likely to rocket the US. So, euro down to 111 something. Aussie might come under pressure again. Although, if strong US data and the markets, the S&P is starting to set up for a bit of a relief rally. What you're going to see is that could help the Aussie. But yesterday the Aussie failed at my fast moving average, which I thought it might rally to the slow moving average of sort of 71. Well, 71.09 was the level I was looking for it to get to last night. It didn't quite get there, and then maybe 71.90. But it's pulled back a little bit today, and it's on its hourly uptrend channel. In terms of stocks in the ASX, it's going to be a quiet day today. Melbourne's on holidays for a grand final public holiday. What a ridiculous waste of resources that is. Businesses in Australia, or in Melbourne at least, have to pay their workers to not turn up because there's a grand final tomorrow. That's a bit silly, but anyway. So Melbourne's got the day off, so the ASX should be relatively quiet. We've got retail sales out here at 11:30, and if you have a look at the NAB retail sales index, which is what I use as an online retail sales index, I should say, which is what I use as a guide, then we see that yesterday they released data that showed sales were back up after being weak in the previous month. So when they were weak the previous month, I didn't expect retail sales in July to be negative, but I thought retail sales in July would undershoot market expectations. Of course, they went negative, and they did. This month, the market's looking for 0.4 based on the NAB's online retail sales and what we've seen there. And there's no reason to think what people spend in the stores should differ that greatly from what they spend online once the online measure has been around for a few years, which it has. So my sense is we'll get a good number in retail today, and that's going to help the the Aussie dollar. So here's the chart at the moment. You've got this 70 sort of 20, 30 region. This is an hourly chart. So, these are small ranges here and small bickies really. But, I'm guessing we might see a 40 or 50 point rally at some point today. And from there, you'll see, see where we find resistance again. In terms of, this is my Go Markets report from this morning, and this will be my chart of the day later on today. This is the ASX 200 cash and futures, the MT4 Go Markets version. You can see that where that arrow is, you can see that the ASX failed yesterday overnight at the slow moving average. It's amazing how often that happens. But it's also coincident with the little top of the uptrend. So, we've still got some wood to chop in the local market. For the ASX to get overly excited, I'd have to see it up through there. It's going to take its lead, obviously, from the S&P and what the S&P does tonight in post, non-farms trade. Now, yesterday we talked about the long-term outlook for the S&P and the fact that it's in a topping pattern. This is the short-term daily chart, and what you can see here is we've got a nice little low here. We've had 2 days of rallies. My sense is strong non-farm payrolls probably gets you up another sort of 20, 30, 40 points. That's the way I'd be positioned, or I will be positioned going into trade tonight. So non-farms is the big one. Market's expecting somewhere above 220,000. Look out for a revision for August. Watch retail sales today at 11:30. China is still out. Japan will probably give back some of its gains. It was up 1.92% yesterday, so that could set the tone. Oil's had a wild ride. It was up at $47 at one stage last night, but managed to finish just above 45. So the volatility continues. We need to see this settle down. One thing that is worth highlighting, non-farms is probably going to be strong tonight, but those ISMs and market PMIs are showing some sort of a slowdown from recent pace, not necessarily slowdown per se, but we also saw that the Atlanta Fed last night with their new GDP Now indicator dropped expected growth for Q3, which is obviously just finished this week, from 1.9% to 0.9%. So in terms of a growth rate, that's a big deceleration from the latest read of the Q2 growth rate, which was 3.9% annualized. But anyway, non-farms is huge tonight. There'll be plenty of catalysts for trade, plenty of move. Watch your levels, and it's still a very, very volatile time. But as the charts that we've just looked at show, the charts are still working. So I'm continuing to use those as my guideposts. And this is not an advice column, but even if you're not necessarily a big chartist, they do help you know what levels people are looking at. So if nothing else, that's why I'd be using them. But it's a long weekend here in Australia. In Sydney. Well, I'm not in Sydney, but I'm in 1 mile, but here in New South Wales. So there'll be no broadcast on Monday, but I'll be back on Tuesday. Have a great weekend. I'm going for the Eagles in the AFL Grand Final, and I'm going for the Cowboys in the NRL. I hope they can both win their respective flags. Have a great weekend. Bye for me. I'm Greg McKenna. See you Tuesday.